This is a Business Channel special series, Hong Kong Investing Now and for the Future.
I'm standing outside the Shanghai Securities Exchange where 170 stocks owned by the Chinese government trade. 30 of them trade B shares available for foreigners to buy.
Well, this is very difficult. The Chinese started the stock market in about 1989, and the share market has actually grown quite dramatically. The market capitalization of Shanghai today is larger than the Hong Kong market was in 1984, and the market capitalization of Shanghai is today as big as Japan was in 1969. So it's grown already a lot. But the companies that were floated in Shanghai and Shenzhen are mostly kind of state enterprises, poorly managed, with frequently obsolete technology. Their shares are not particularly cheap. The management has no ownership in the companies. The management is frequently more interested in making side deals and kind of ripping off shareholders than really to build up a business and make the share price go up. So I'm not so keen about Chinese stocks at this stage.
It's too early for foreign investors. In general, there are very poor accounting standards. The market has a casino-like mentality, which doesn't really reflect the values of the companies themselves. This will change as the market matures, and in time it will emerge to be a fine market. But right now, the way to invest in China is not directly in Shenzhen or Shanghai, but it's in Hong Kong.
Now we now have 11 large corporations in China listing in Hong Kong. So anybody who wants to invest in China without sort of buying a shop in there or buying a factory, they can actually invest in an equity, in a security in China. Now we're just seeing the beginnings of this, only 11. In due course we can actually see, and I'm sure we can see, the really large corporations in China listing in Hong Kong.
This is the Shanghai Swap Center, a foreign currency trading floor. 48 banks are represented here, and they exchange foreign currencies for corporations. The corporation must apply to the central bank for the privilege of exchanging. Two currencies are dealt with here, the Hong Kong dollar against the RMB, which is the Chinese currency, and the US dollar.
Well, by and large, the Chinese currency has been very weak over the last 10 years. I mean, the currency since 1982 is down about 80%. This year, the currency has been remarkably stable, and I suspect that the stability is due to the fact that there was very tight money, and that therefore very few imports came into the country. But I don't think that this stability in the currency will last. I think by next year, at latest, we'll have another fairly strong devaluation in the RMB.
3 to 4 years ago, construction on this 4 square kilometer area known as the Shanghai Free Trade Zone began. It'll be office buildings, warehouses, and hotels. The Free Trade Zone is for the purpose of huge ships to come in and unload their cargo, and companies to store those goods tax-free until wholesalers come and view the goods, buy them, and then eventually sell them to the retailing public in China.
Because Shanghai has a very high level of education and sophistication, within 10 years it will be again a very, very important city in Asia and will actually dwarf Hong Kong. Don't forget that within 1 hour's flight distance from Shanghai, we have over 450 million people living.
Shanghai has a population of 14 million people. Most of them commute on bicycles because there is no mass rapid transit and the freeway network is under construction. The most common expression is, if there's no traffic, it'll take 10 minutes to get there. If there is traffic, an hour. We always took an hour to go anywhere. The Americans are here, and the biggest corporations are advertising that fact. My view, after seeing Shanghai, is that it's a dust bowl of aggressive construction attempting to catch up on 40 years of modernization overnight. The big hotels are spectacular and expensive. China, the sleeping giant, has awakened. For many, the only way to invest in the emerging Chinese economy is by buying stocks that trade here on the Hong Kong Stock Exchange. I'm Richard Saxton on the Business Channel.
You have been watching a Business Channel special news feature, Hong Kong Investing Now and for the Future.